What up, traders? What up, investors? Ken here from the Dyslexic Investor, and this story just kind of came across me. And it's Bill Ackman created Hedged, is a hedge fund manager, runs Pershing Square, basically made a bet on March 3rd saying that markets are going to go substantially lower, put his money where his mouth was, basically becoming the original a high-level OG Wallstreetbets honoree on being basically taking this huge bet and basically generating $2.6 billion, and that is with commissions totaling $27 million. So basically closed their bets about 2 days ago now. Actually, it's the 25th today, and they are taking all this wonderful cash they made and then buying it into Allergate, Berkshire Hathaway, Hilton, Lowe's, restaurant brands, and reestablishing a position in Starbucks. This is quite a lot of money, of course. But again, if you don't know what Berkshire Hathaway stock is, Berkshire Hathaway stock is probably worth, I think it's like a $270,000 a share. Yeah. So this is the letter that he wrote to his investors. So this billionaire investor is basically dumping all this cash and buying all his favorite stocks that he and his company want on a very steep discount for holding it for the long term. So basically they just played the huge increase in volatility. So they played basically the market fear, using his projections of how the coronavirus and COVID-19 was spreading. He was saying that there was going to be a pretty huge impact on the market, and he took very well capable of doing that, and just basically now banking off a couple $1 billion to be able to buy some stocks that he wants. So we're going to go ahead and jump into the different various stocks that Mr. Good friend, good pal Ackman bought. So we're going to go on the very first one. He went with the A, which is Allergant. That's loading. Okay. So here it goes. So again, this a couple months ago was the $90 stock, and now it got down to $60 and now trading around $69-$70. Of course, again, these are going to be all on steep discounts. It looks like this thing, which you're going to see quite often with a lot of stocks, they're going to be better looking at. So once we look at the weekly chart, you're going to see it basically holding or staying above or around its 200 moving average on the weekly side. So this is going to be kind of a key perspective. This didn't sell off as many of the other stocks we're about to look at, because you can kind of tell here with the RSI kind of gently went down. A lot of them just came crashing into the 20 dot here on the RSI and just made that line turn teal. That being said, this is a very strategic play. Like it looks like anything below $70 is probably a worthy bet for a long term. So we're just going to put an alert here to see if it's able to break above that. So that is that one, and then now we can go to Berkshire. So it's BK. I think it's BRK, or is it, yeah, BRK A. There we go. All right. So you can see here, this is crazy. It's a $27,000, $759 stock. Okay, that's not easily purchased for the average Joe by far. Some people will never even see that money in their lifetime. But basically, it closed at its all-time high. It was $343,000 and $400. If we kick this out just a little bit more, and again, that's his lifetime high, and you can see here on the weekly chart, it did actually completely break and close multiple times below the 200, and just kind of still below it on its 200-day. Again, this is much more oversold. Again, this is at a printing at a 30 still. It didn't turn the RSI completely yellow or teal on the line here on being able to be completely oversold. So again, if we look back again, a lot of these positions they said they added 2 days ago, which is aka the bottom, which is Monday. a lot of them liquidating all of their short side things and all getting into their long calls or long other various options plays, or probably just buying straight up stock. Looking at this here on the, let's go here. I want to do this on this right here. Nope, right here. So again, this is again a crazy number of stock, but it doesn't. You can see on how far it broke out of the 3 deviations and the amount of volume that we saw. We haven't seen this kind of volume in a really long time, so we're just going to pop this out and let this load. Why is this weird? It's not loading over here. Or maybe there wasn't that high of a volume. Like it doesn't say. Let's go. Of course, it's got to show volume, right? But anyways, so again, this is a lot of the stocks you'll see as well on the daily chart. They're going to be well below the 200. On the weekly chart, they're going to be in around their 200 on that period. But you're going to see them, a lot of them coming up to, on the daily chart, to their 21 exponential moving average. Anything really above this is if you want to flip a coin, if you want to go long or short, because it's going to be a very telling market. And if it breaks above this and stays and closes above it, that's a very positive sign. So then the next one is we're going to look at Hilton Worldwide Holdings. Of course, these individuals got pretty much hit extremely hard as well, due to the huge sell-off. Again, you see here, it's still below its 21 here on the exponential moving average. So we're just going to create alert here at or above. So that at or above is around $78.94. Popping this out towards more of a weekly side of the house. We're looking at okay, the Hilton hasn't been trading that long. Looks like it's a reformed stock. As you can see here on the 200-day, it did not hit the RSI as teal as well, but it basically did hit and bounce. Again, having a huge long wick right here is kind of a sign of a bottom, so it's a lot of capitulation of people trying to get out of their shorts, and then at the same time people trying to buy at the same time, creating this really long stick and very wide range in just a single week. And then this stock was basically 115 just a couple months ago, less than a month ago, about a month and a half ago. And it traded all the way down to $44, getting cut in half by like 60%, and now closing at around $72. Still a very steep discount. Looks like it pays a 15-cent dividend on those assets. That's not bad at all. All right, next is Lowe's. I'm more of a Home Depot guy, but that's okay. Lowe's basically was trading at 126 just literally a month ago. Went down all the way to 60, getting a heck of a haircut. This is the thing that I found super strange. So that initial drop right here from 126 to basically a hundy, it was so steep on the amount of just selling on the capitulation of just that amount of velocity coming down. A lot of people would have saw, like, this is why you don't trade on one single indicator. So this doesn't mean that this is a buying opportunity right then and there. You did see the overall, just everyone just dropped this stock. Basically, the checking in money flows, basically what people are buying or purchasing or potentially going to be letting go. So if it's above it, a lot of people are purchasing it and it's fairly well off. But then if it starts going down completely negative, like you see here, it's just people are just trying to get rid of it and just getting it off their books. And this has just been this is like just a complete drop off, almost like a 90-degree angle down. It just fell out of the sky literally and basically bounced around here around the 65 level for a couple days, and then now making its comeback again, not above its 21 on the daily chart. So if you go to the weekly chart, again, kind of the same picture. You're still below the 200 on the weekly chart. You did bounce pretty heavily on the weekly chart. And a lot of the moving averages are still pointing down. So you still kind of want to see the 5 cross into the 8, and then the 8 and the 5 cross into the 21. But this is going to take time for this to rebuild. Like, you can see here this has been just a heck of a drop from 126 down to 60 and just kind of bouncing around here in this area. Next, which is, I don't believe we can see this stock, which is the Restaurant Brands International. So this is your Burger King, your Tim Hortons, and your Popeyes Louisiana Kitchen, which, let's see here, it is QSR because it trades in Canada. Oh, it is? Okay. It does trade. Okay. We're able to see it here. Okay. I wasn't completely aware of this because I haven't touched this before. So basically, kind of the same story. Trading basically 80 bucks up here. Went down all the way to $25. Like, that is probably like a, what's a 75% haircut there? That's a 69% discounted price. So that is quite fantastic if you are a fan of the Tim Hortons, Burger King, and Popeyes Louisiana Kitchen, which I love my Popeyes. I still have not tried that sandwich yet. I need to try that sandwich. This one too is actually, it did break the 21 here, but it didn't close above it. So we're just going to keep that out there as well. But this is what I'm talking about. Like, if you just look on a daily chart on this guy, this thing was just oversold severely bad. But the first oversold sign came in pretty early on at $47. You could see that some people did buy that, and then that's why you see the huge gap down. It's like 2 or 3 days. These 3 days of just gapping down. Because people are like, oh wait, that is maybe not the bottom, let me get in at the bottom. And to do the combat of that is basically, if these moving averages on a daily chart are still falling to the ground here, it's probably not the bottom. You kind of need them to a sign of kind of start curling up slightly. I know it's kind of a visual art form kind of thing, but with the combination of that, and then you're seeing the momentum change as well, start going up. Same with the Chaikin money flow. You can see here at the $47 price that momentum was still projecting down. There was still red on the TTM squeeze. Yes, there was oversold on the RSI, but everything else was still pointing south. And then we move this out to a weekly chart. You do see the oversold here a little bit better. This would be a little bit more of a stronger indicator on buying something oversold. There is still some capitulation going on here, but you see the Chaikin money flow kind of curving up, RSI coming off a little bit, and then the overall momentum slightly shifting. You would like to see the TTM squeeze here kind of start turning yellow in the next 2 or 3 weeks for a potential run up to the $58, $60 frame there. And I believe, and then the last one they also talked about in the article, and what Mr. Bill Ackman is putting his cash into is the Starbucks. So that's SBUX. We're going to go look on a daily chart first with no interference. Oh, my bad. So this was basically, oh wow, this peaked way long time ago. So basically $99.72 way back in the summertime in like June and August. And then has been trading sideways quite some time, kind of hitting its 200-day, bouncing around a little bit, coming back up a little bit. And then this is where, this is crazy. Holy moly. I must have put this alert out waiting for it to break 94 because I kind of saw this cup and handle and I wanted for a breakout to see if it would go. And luckily I didn't buy and it just kind of came crashing down, and we'll just kind of see what happened here. Looking here on the overall indicators, came crashing through on the RSI, but you do see again these oversold. So you're seeing these oversold basically on the end of February, but the stock was still at $77. But the overall everything else was still printing red here. The Chaikin money flow is kind of throwing you a mixed signal here. But they weren't, none of the moving averages were curving up. So looking at this, they weren't able to break and close above the 5 or the 8. Well, it was closed above the 5, but not above the 8. And the 8 was quite far from the 21, indicating where it still had to take time to kind of curl up. And you can kind of see that happening right here, basically on Monday, where you did see a couple yellow bars here on the TTM squeeze. But then you also see the follow through of momentum going higher, the Chaikin money flow going higher, and then you see the overall long candlesticks here, usually indicating these long wicks on the very bottom here, usually indicate a potential reversal coming in the next couple days. That is also in reverse to the other side of the plan of if it has a long candlestick pointing down, and you can kind of see here the momentum is shifting up very high. On a weekly chart, kind of gives you the better picture. This is where the RSI kind of comes into play for myself, is more on the weekly chart, because it gives you more of a longer time frame horizon on what is actually happening. Seeing that RSI more accurate towards its oversold limit at 316. So basically 2 weeks later on the weekly chart, we had basically the end of February was the RSI on the daily, but then we wanted it to be a little bit lower on the weekly chart. Looking at this again, this is showing around the same amount of charts that we're seeing. Is it did close above its 200, which is quite fantastic, and since it has such a global reach, basically I think having like 30,000 locations or something like that. And again, this is a big competitor, honestly, in China, so they wanted to get open up as quick as possible to start competing and making markets in there. Again, guys, a big shout out to Mr. Bill Ackman for completely crushing it here, and just taking the markets by its horns and driving the bull into his wallet. All right, guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.